Welcome to Trading Lounge and the US indices for the 12th of October. Starting on the monthly chart here because beginning of the week, and we're looking at wave 3 here, the top of the tech bubble, an A and a B and a C here for wave 4, and then 1 and 2 and 3 here, an expanded flat for wave 4 here, and then looking up for wave 5 for this move here. Now let's go in and have a look at this on the weekly chart here and just discuss a few little things at this particular point. So as you can see here, we've got a nice expanded flat correction for wave 4 in this space, and then we're looking up for wave 5 here. As I mentioned before, I figured that this was wave 4 here and that we'll be moving up for wave 5, so that seems to be playing out on the right pathway there. What I don't know, and this is something that I need to start having a look around at other markets to see if this particular, I've got this as wave 1 here and pulling back for wave 2. Now that may not be the case. It may be that we've got wave 5 sitting here for this, so from wave 4 to wave 5 here, and being completed at that point. And that would be the end of, that another cycle at that point. So if I can just borrow this here. So that would be an end of a much larger cycle at that particular point. So what we've got to figure out, and I'll have a look around at the other markets now that we're making a bit of a move up through here and we expect a high to be made above here, is that it's got to figure out if we've got wave 1 here or wave 5 of 5 here. So there's a couple of ways we can do that. I'll have a look around at other markets and see how they're panning out and what they need to do to fit, because there may be other markets that haven't made it to the previous top over here, but also have an impulse wave up to maybe this point here or something like that. So then I'll be able to recognize that and we'll be able to figure that out. The other point is once this starts to correct here, then we'll also be able to figure that out as well. But it won't be that easy figuring out, because a wave 2 has got the same pattern as a bear market. It will have a 5-wave structure, a 3-wave structure, and a 5-wave structure. One of the things that will stick out though is that this wave 2 here won't be as sharp as wave A here, but in a bear market it would be sharper. So there's things like that we can figure out along the way. But anyway, I'll need to resolve that now that we've started to make a move in this particular space here. If that is the case, if this is wave 2 here, then we've got a fantastic opportunity here for wave 3 to play out here. I know it sounds sort of crazy when you start looking at the earnings and the valuations of the SP 500, but as I've learnt over the many years is that there's nothing too high and nothing too low, so don't get fixed on anything, but that will give us a third wave. Now this third wave here, this will be basically payday, so we will be entering our portfolio stocks into this trend, all our growth stocks that we've been working through and looking at. So yeah, anyway, that's that's another story and another chapter. So let's just move into this daily chart here and get back into the daily grind of things. So from this wave 4 here, we're looking at wave 1 and 2 here, and 1 and 2 and 3 and 4 and 5 here for wave 3, back for wave 4 here as a nice ABC pattern here, and then looking for this move, taking this high. Because this is corrective, we'll be looking for this high to be taken out, and we're tracking 5 waves within this sequence, as you may know. So we have 1 and 2. The third wave normally comes in at the previous tops here, and then wave 5 coming in through here. Now, will we reach 4,000? I don't know. All we have to do, or we can do rather, is just count the waves as we go to the upside here. There's a couple of important targets from 3,000 to 4,000. We've got the Fibonacci numbers as a price ratio. So we've got 1, 2, 3, 5, and 8. Also with 8 here, we can also bring in group 2. So group 2 would be 3,650 here. So I'll just pop that in there because we need to start 3,650. We need to start looking at these targets. The other target in here, of course, is the 72 number. So that will be 3,720 in this case. So that makes up group 2 in that space. So these are just some big numbers that we'll be looking at in this space here. There will be there will be resistance in this area here. I mean, if it doesn't reach the 4,000, well, then the number 8 here is where it's going to fail. And what I mean by that too is that the second strongest number is 5, so the 500 here. So once we get tested support on that 500, then we straight away look at the number 8 here. So if the market is going to fail and not reach the 4, this is the space that we need to be looking at that point. But at the end of the day, the only evidence that we can track is the wave structure to the upside. So that's what we'll be doing. Normally when the extension is in wave 3 here, then wave 1 and wave 5 will be roughly the same size. But obviously in this case here, we can't have wave 1 the same size as wave 1 here, the same size as wave 5 here, because it's not going to get us anywhere near to where we need to go. So we need to, that's just being practical about it. So that's why we need to look at oh, not too bad. It could just get to there. But there's other ways to look at those targets, but I won't worry about those just yet, but we can explore them just as an educational basis, but I won't do that right now. But yeah, the main next job here is the 3,500. So if you're going to take any profits on trades, that's where it would be at the 3,500 there. But we can expect a classic trading levels pattern because it hasn't made a new high. We can expect a classic trading levels pattern across that particular level there. And hopefully, we don't know yet, but hopefully that's just wave 1. But I'll put it there, and like I said, I need to figure that out. That's just another little task on the list that we need to do, but this is where we are at the moment. So we do have a nice 5-wave structure up here. As you know, we've been trading that and working through it, and then we're looking for 1 and 2 and 3 and 4 and 5 up through here. The Nasdaq has got a slightly different count within all this space here, so we need to take that on board, and we need to figure that problem out as well. And we can do that by looking at stocks. So that's another little task that needs to be done as well. But our attention now is at the 3,500. So we have long positions in the market. So you've got to figure out if you want to take part profit at the 35, all profit at the 35, buy pullbacks, do whatever you need to do. But at this stage, we should be moving higher. We're above this, from this high to this low here, we are now, that's the 50% retracement level and the 61.8% retracement level here. Not that that's the end of the world here. Let's just have a look at where the square root of 61.8% sits as well. So 78.6. So yeah, that can take us at that point there, and that's kind of really important, that level there, because if I look at the Nasdaq just for a moment, let me just bring that back in. Because what I've got to figure out is I've got to figure out that this wave 4 here is quite simple as an ABC pattern, but what we still need to get through on the Nasdaq is that will this be the A wave here, a B wave sitting here, and a C wave coming over here as a larger flat correction for wave 4. So that's really possible when we look at the NASI over here for a moment. So far, we've got this down here as an A wave, a B wave, and then down for a C wave at this particular point. But it's possible because, see, on the SP 500, this high here became higher than this wave 1 here, but on this market it dropped lower here. So I need to look at this as a 5-wave structure, but that could be wave A here, wave B here, and then wave C finishing at the 61.8% mark for wave B, and then down to wave C here. Look, I don't think it's the case, but it's my job to point that out. So I'm pointing it out. So I'm just pointing out where the risk is in the market. And so on the S&P it's at 3,500, and here it's 11,800. So 800 is a really important number. I always call it a profit-taking number. So until that becomes a tested support, then that's an issue as well at that point. When I look at stocks like, what's this here, Apple here, I won't go into a whole lot of stocks at the moment. I can see that Apple needs to push higher. Well, we've already been through this. We had a nice impulse wave up here, then a corrective wave, and then 1, 2, 3, 4, 5 for the third wave, an A and a B and a C. So I know that this is all corrective here, so we'll be taking out that top here. So you can continue to trade Apple up to 120 at that point. So because of that, that will leave us, we'll put this higher above here, and I think we've still got further to go on the NASI here. I'll just check on the hourly chart here. So we've got 1, 2, 3, 4, 5 here, an A and a B and a C wave here for wave 2. So on the S&P 500, we've called, sorry, my clicking working, on the S&P 500, we've got this as wave 1 here, and wave 2 of green sitting here. So there's a slightly different, it's out of sync here. Now one of them is right and one of them is wrong probably, and that's what I need to figure out as well. But as far as the crow flies, this has still got further to move up. I'm not that worried about that at the moment, and the reason I'm not worried about that is that it's this market, the S&P 500, that's leading the way to the upside. If it was the Nasdaq, well then I would focus a little bit more on that, but that's not the case. So the 78.6, the square root of 61.8% is important. So we'll need to understand that a little bit. But yeah, so I'm just going to remove these here for a moment. Just leave those there just to remind us of the danger at this point. Now, let's go to the hourly chart. But in a nutshell, if it's going to be, as somebody mentioned, said, "Oh, Pete, this looks too easy, so there's got to be a problem there." And strange but true. But what we'll do is we'll just look for a classic trading levels pattern at this point here for this. So let's go to the hourly chart. And the classic trading levels pattern, of course, is this pattern here where we have the arrival, the reaction. If this is the 3,500 area here, the first high above the level, that's our reference point, then a corrective move, and then moving to the upside here. So this is where you would take profit here, so you don't have to get, you don't have to be involved in a lot of this here, or take part profit here, or leave some skin in the game, do whatever you need to do at that point. But that's the risk area, and that's what I've just explained. And because that I said that's the risk area, 3,500, and because of what I've just shown you on the two charts, there can be a variation on this. Can be two variations, but we'll just have a look at one, and that's one where it doesn't come back below the level here. So we'll take that on board as well. But in both cases, what we're really looking for, if you're taking profit over here, what we're really looking for is that first reference point high here, because that's where we'll go long again. But then we try to find the second high, and we may be able to, if it drops down here, we may be able to pick it up down here as well, because we'll be pretty confident of picking it up down here, because we know that the rest of the structure that's moving up here is not completed at this point. But otherwise, normally we get out here and we get back in over here for this. And this is the number 5 level here, the 3500. So it's 5's second strongest number in the market. So we should see some sort of correction at that point there. Now, in terms of the count to the upside here, as you know, we've got wave 4 here with 1, 2, 3, 4, 5 for 1 and 2. We're looking at this as 1 and 2 here, and then we're looking at this as wave 3 here. So I'm looking at wave 4 to move across here. So we should start to end up a little bit higher up here for this. So in a nutshell, we'll be looking for the arrival, the reaction in 3 waves, first high above the level, and then an ABC correction, and then up again from that point. So we'll look at that point, and we'll try to move in through here as well. Now, also what I've done as well, this wave 3 here should be longer than wave 1, which it is, so everything is cool. Now, wave 3s can have the extension in them, and this is showing that extension here. But also what I've done, when I've counted this up through here, I've counted it up in the most conservative way possible. I also understand that this wave 3 here can take us much higher, right? But I'm not going to go there today with that. I'm just going to count this up here in the most conservative way possible. Okay, so that's what we're going to have a look at, and I might just jump straight to the tick chart. This is 100 ticks on this chart here. Let me just bring in a bit more data. So this is how I've got it counted. I might just bring, that's 100 ticks, and this is 5 ticks. This is my working chart here. So what I've done here, I'll just go through it, because I think it's you know, at the end of the day, it's all in the details. So what I've done here is I've gone 1, 2, 3, 4, 5 for 1 and 2, 1, 2, 3, 4, 5 here for 3 and 4 here. And then I've gone 1 with 5 waves in here for 1 and 2 and 3 and 4 and 5 here to make wave 1 here. So we're looking for 5 waves of this degree here. And then I've got 5 waves in this little move here for 1 and 2, then 1, 2, 3, 4, 5 here for 3, 4, and then this is 5 waves up into this space here for wave 3 here. So then I've got 1, 2, 3, 4, 5 for 1 and 2 here. Nice strong third wave here with 1, 2, 3, 4, 5. An A and a B and a C, I'm thinking that of, and 1 and 2 and 3 and 4 and 5 for 1 and 2. Another strong wave 3 here, and nice complicated wave 4, and then a wave 5 here. So realistically, we can already be finished here, but you know, when Friday closes strong in our bullish weekly cycle, when Friday closes strong, Monday's going to follow through, and then we're going to see a bit of profit taking on the Tuesday, and then we've got Wednesday and Thursdays that are the swing days, and then we push up higher after that. So that's the bullish weekly cycle, which is on the website, so you can track that. It's you know, when you see it occurring, then it's helpful. You know, that's all it is. It's not like, oh, you're wrong or you're right. But if you see it unfolding, then you know, in that order, then you know, it's just another pattern. That's all it is. So just checking here for a few things. Yeah, there's space for it to push up. So let's just see if it gets sucked up into this 500 here, the 3,500 at that point. But yeah. So that's really it in a nutshell. I'm just going to push this back over. Yeah. Just take this back to the 15-minute chart. Just don't need to go there. Let's go back to the hourly chart. Just recap a little bit here. So I can count 5 waves in this sequence here, right? The second point is that I know that I could probably look at this a bit differently and count this up for wave 1 here and 2 here and 3 here and 4 here and 5 here and move back higher into this space up through here somewhere. There's a fib target up there. But I'm quite sure we're going to have at least some type of corrective pattern across this level here. It's probably not going to be as big as what I've drawn out here. I've probably animated it a bit, but just be aware that's what's going to be occurring through that area there. The other thing that I find sort of interesting as well with the markets at the moment, if I can just go to the wave 4 here for a moment. This wave 4 here is also showing up in gold, in US spot gold. So we've got wave 3 up here. They didn't start at the same time. This one here started like a month earlier in August, where the S&P was in September. But they seem to be finishing at the same time. Seem to sort of have the same sort of structures in a way. Silver's much the same. Even Bitcoin is in there doing the same thing as well. So there's a whole lot of markets. So it's like they're all in sync for this sort of run here. So I don't think it really matters what you trade, long as you know you're in the market at the moment. That's pretty much the main thing at the moment. And don't overtrade. Just have a reasonable trade, and that way you will be able to stay in the trend. And I'm talking to new traders here, of course. So don't get greedy. Don't let greed get the better of you. Just less is more, and then you'll be able to stay in the market with a wider stop. And it's important that new people stay in the market with a smaller position, because you need to observe yourself. You just need to observe your own emotions and your own actions, and you need to note them down. You don't have to write them down, but you just need to note them. You need to note your own strengths and your own weaknesses, because you have to go through that psychological process. Because it takes courage to stay in a trend, and you need to break that down to get organized in that. Alrighty, enough waffling on. I'm out of here. Thanks for tuning in. Much appreciated. Cheers.